Since Trading212 launched their cash ISA with market-leading interest rates, people have been thinking it all sounds too good to be true. After our video about earning interest on uninvested cash, Trading212 launched their cash ISA with identical rates, and this has left many people confused about whether their money is covered by FSCS protection. And the simple answer is, well, the simple answer is that it's a little bit confusing. But don't worry, I'll simplify everything in the next 6 minutes or so. Let's cut to the important stuff early on. Is your cash covered by FSCS protection inside Trading212's cash ISA? The short answer is yes. Any money you hold inside their cash ISA is covered up to £85,000 by FSCS protection. But the long answer is, there's a small catch. Trading212 currently uses 3 different UK regulated banks to hold your money at the time of recording this video, with them being Barclays, JP Morgan and NatWest. Any money you hold in your Trading212 cash ISA is split up and held in these 3 banks, meaning you are covered by FSCS protection on 100% of that money, up to the £85,000 limit. And if they were to change the banks they used, you would be notified and you'd still be covered. You can go and check this for yourself because the app shows you exactly how much of your money is being stored and where it's being stored, and it's all stored with FCA registered banks that are covered by FSCS. This money is safe. However, there is a rare occasion where your money wouldn't fully be covered with these banks, but we'll cover that a little bit later on. So if it seems like you're covered in the cash ISA, where's the confusion coming from? On the surface, it all seems pretty straightforward and your money appears to be fully protected. Well, everything changes when you look at the interest that you can earn in their other accounts, and when you try to look up Trading212 on the FCA register or the FSCS protection checker. Inside Trading212's Invest account and Stocks and Shares ISA, you have the ability to earn interest on your uninvested cash, which is a big selling point for the broker as they currently offer the same rates as their cash ISA. The important difference here, when earning interest inside your investment account, not your cash ISA, is that not all of your uninvested cash is protected when earning this interest. Let me explain. In order to gain access to this interest in a Trading212 investment account, you need to enable the Earn Interest on Your Cash feature inside the settings. But this will change how Trading212 holds your money on their end. If you don't turn this feature on, your uninvested cash is protected by the FSCS even in your investment accounts. And if you turn the feature on, then turn it off again later, your funds become fully protected again. But if you do enable this feature and keep it enabled, well, firstly, you'll start earning interest, obviously. But also, while some of your uninvested cash will still be split between the 3 banks that we mentioned earlier, a large portion of it will also be put into QMMFs, or qualifying money market funds. Money market funds allow Trading212 to achieve their high interest rates, but they're technically investments, meaning they're not covered by FSCS protection in the same way. Although they're considered very low risk and Trading212 carefully vets each fund, the percentage of your money held in QMMFs wouldn't be protected if the fund collapsed. Importantly, this only applies to the cash that you have sat in your investment accounts and have left it uninvested for whatever reason. The reason people are getting confused is because of the 2 different types of interest they offer within their accounts. One is cash ISA interest, and one is called interest on cash. So they're very similar names. The interest rate you get from the interest on cash feature is also the same rate of interest that you gain from the cash ISA. So it seems like your money held in the cash ISA is also being stored in QMMFs, but it's not. And it's easy to see why this is confusing. Even when you search how Trading212 can offer such a high interest rate in their cash ISA, it immediately comes up with incorrect information. I guess that's not unusual for Google these days. But it's not just Google that I think is a little unhelpful. If you try to look up Trading212 on the FSCS protection checker, they don't show up. And if you look them up on the FCA register, it says some activities by this firm may not be protected. That sounds very scary. But look up any bank that also offers investment services and it will say the exact same thing. Here's Barclays, HSBC, and Lloyds for reference. This is again because investments are treated differently. If you look closely, you'll see that the text on all of these pages also says, if this firm goes out of business owing you money, you may be able to claim compensation from the Financial Services Compensation Scheme. It seems like they apply a vague boilerplate disclaimer to all financial companies instead of offering actual helpful information, which is a bit of a shame. But rest assured that these interest rates are different things and your money is protected in the cash ISA. And so is your uninvested cash in the investment accounts if you don't enable the interest on cash feature. And even if you do enable this feature, your money is considered to be held in relatively low risk investments. All investments have risk and can decrease in value. We're not financial advisors, but you can see the risk profile for yourself. Many money market funds are scored a 1 out of 7 in the risk and reward profiles shown in key investor information documents. And just for comparison purposes, Vanguard's FTSE All-World Global ETF is scored a 6 out of 7. Despite all of this, I did mention earlier that there is an exception to the rule. Sometimes your cash will not fully be covered. Even though it's unlikely to ever happen and it will only apply to a small percentage of people, it's worth knowing about just in case. FSCS protection covers you on a per person per firm basis, meaning that you're covered up to £85,000 with any regulated bank or broker that your money is stored with. But seeing as you're only protected up to this amount, things could potentially get a bit messy if you use the same bank as Trading 212 do. So if you happen to have £70,000 held with Barclays, for example, and £50,000 in a Trading 212 cash ISA, overall you'd have exceeded that £85,000 protection limit with Barclays. So any money being held with Barclays that is over the £85,000 limit would not be covered by FSCS protection. While the chances of this being a situation you find yourself in are very slim, it's not completely impossible. There's always a chance of the worst case scenario happening. But if this was the case, in order for your money to actually be at risk, the near unthinkable would have to happen. Your bank would need to go bust and close its doors, which would likely cause a tidal wave that crashes through the global economy, and therefore is something the government has historically tried to prevent through intervention, as we saw with Northern Rock during the financial crisis. The efforts made to make sure that banks have not folded in the past have even led people to believe that if a major bank was to go bust, it would signal the end of the world as we know it. Aside from that very specific scenario, any money you hold inside of a Trading 212 cash ISA is fully protected by FSCS up to £85,000. Even though it might seem like the earn interest on your cash feature is similar, the two are completely separate, meaning your money in the cash ISA is not being held inside of QMMFs. But this doesn't answer all of the questions around the safety of your money when you store it inside a broker or bank. If the worst case scenario happened and Trading 212 was to go bust, what would actually happen to your money? And how would you claim compensation for your investments? Watch the next video that's on screen now, where we'll go through all the details that you need to know.